This conference will now be recorded.
Welcome to the Futures Edge recap. We're about to take a look at the S&P 500 E-mini futures. The current time is, today's date is July the 16th, 2019. In front of you is a risk disclaimer. This means there is risk involved in trading. You should never invest money you cannot afford to lose. Always keep equity management in mind. Understand that we are not CTAs, which stands for Commodity Trading Advisors. So when we look at the S&P 500, we're right at that resistance level, which we're anticipating the market to dip bearish if resistance holds. The market still has the ability to close above it, but granted, it is the middle of the month, so we still have to wait 2.5 weeks, almost 3 entire weeks, before the market can actually, before this candlestick can close, so a lot can happen. We go to the daily time frame, and we can see that the market came within 4 ticks of hitting the Fibonacci extension. The market had a bearish move today, and we're right on resistance becoming support, and we're approaching the uptrend line, which basically means tomorrow we could have a nice little buying opportunity or indecision candlestick tomorrow. We go to the 1 hour time frame. We can see the market came just shy of the U-turn zone, which is that Fibonacci extension for the daily, which is going to be 3024.50. Market dipped on the S&P 500, broke the inner trend line, moved towards the outer trend line. Ideally, tomorrow morning we come in, and it'll give us some nice buy trades tomorrow on its way back up. You can see we're at a area past U-turns. Here's a high, there's some highs, there's some highs, there's a U-turn, there's a future U-turn, anticipating the market rally. All right, perfect. So the plan of action is exactly what it's been all week long. And last week, we're going to look to continue to use tunnel trade along until the market touches 302450. All right, everyone. See you tomorrow.